The foreign exchange market, or Forex, is the world's largest financial market, with a daily volume of over $5 trillion, even surpassing the stock market. If you could capture even a small percentage of that market, the financial rewards would be enormous. The foreign exchange market has existed for as long as money itself, albeit perhaps not in its current form. Now, we know you're curious if you can actually make money trading currency pairs on the Forex market. Well, lucky for you, because for today's video here at Data Dash, we will be answering that question and more. But we still have to cover a few fundamental ideas that must be grasped before we can arrive at a conclusion, such as what is the foreign exchange market and how does it function? How do traders often make money? Finally, why do so many individuals fall prey to scams? Make sure to watch till the end to learn even more about Forex. But before that, make sure to hit the like, subscribe, and bell button to stay updated for more of our crypto uploads for you. Now, let's not spare a minute and let's begin. Now, for starters, we tend to overlook the role that financial institutions play in facilitating globalization when discussing topics like tourism, international conflict, and shipping. As a matter of fact, foreign exchange is essential to international trade. Even when gold was the international currency, individual nations continued to issue their own currency. It's important to note that not all gold coins were created equal. Many others contained a combination of different metals. Hence, traders constantly faced the challenge of determining the relative worth of several currencies. Moving forward to the present day, this issue has not magically disappeared, even though we have developed paper currencies and utterly destroyed the gold standard. As every country now has its own currency, things become much more complicated. There are 180 different currencies in use today. We'll pretend you're an American who, seeing as how it's summer, has decided to take a trip to your northern neighbor, Canada. You'll need to exchange some of your US dollars for Canadian dollars before you can shop or dine anywhere in Canada. With $100, you can purchase 100 Canadian dollars if, hypothetically, 1 US dollar is equal to 1 Canadian dollar. The exchange rate between the US dollar and the Canadian dollar in the actual world is 1.36 to 1. Thus, 100 USD will get you 136 CAD. To make your iPhone, Apple can't just bring in some Chinese laborers and pay them in dollars. They can only accept Chinese yuan. Therefore, they must first buy some. Furthermore, they will need to acquire South Korean won if they plan on purchasing LCD screens for Samsung's newest flagship devices. And you may probably identify the hub of international currency exchange. That's right, we're referring about the Forex or foreign exchange market. Now, do we think it's possible to turn a profit through currency trading? Well, the first generation of Forex online trading platforms launched in 1996. Just as the internet simplified stock market investing, Forex trading became widely available thanks to its accessibility on the web. The foreign exchange market offers three primary avenues for making money. The spot market is the most well known, though it's really just a fancy name for a transaction with immediate delivery. For example, when you buy gold, you don't have to wait to receive it until a later date like you would with future contracts. Instead, you become the legal owner of the precious metal right away. Because of this constant fluctuation, it is possible to benefit from trading currencies in the same way that one would trade equities. Currency, like any other commodity, fluctuates based on supply and demand. If, for the purpose of argument, 1 US dollar is equivalent to 2 Chinese yuan, and if more individuals decide to buy the Chinese yuan because, say, they have built up factories in China and now need to pay their staff, then the value of the Chinese yuan will grow. As a result of this appreciation, The exchange rate between the US dollar and the Chinese yuan will shift from 2 yuan to 1.5 yuan for 1 US dollar. This is, of course, a gross simplification, but that's the gist of it. There are a lot of things that can affect the demand for a currency, too many for us to go over in an hour long video. So instead, let's focus on a few key elements. The demand for a particular currency or confidence in the economy's future might be affected by the economy's performance or the political climate. When rumors started flying in June 2014 that the United Kingdom may quit the European Union, £1 was worth about $1.7. The result was a gradual decline in demand for the British pound as investors fled the currency. As of right now, you can get $1.25 for £1. Even China can serve as an illustration. China's economy has been expanding at a dizzying rate over the past 2 decades, leading many companies to relocate their factories there. The upshot was continued appreciation of the Chinese yuan against the dollar and the other major world currencies. Foreign exchange traders do research and make predictions regarding the value of various currencies. If they believe the price will go up, they will acquire a large quantity, store it until its value increases, and then sell it, just like stock trading. Brokers often give their clients incredible leverage, which greatly increases the potential rewards in this market. Brokers often give their clients incredible leverage, which greatly increases the potential rewards in the market. Common leverage ratios in the foreign exchange market include 1 is to 100, that allows you to maintain a position worth $100,000 with just $1,000 in trading capital. Even a tiny profit margin will result in a substantial sum. Alternatively, there are futures and forward contracts. Meanwhile, the majority of merchants don't use them. Multinational firms are more likely to utilize them. Let's pretend that American firm A is interested in t-shirt sales in the USA. Company A wants to charge $15 for a t-shirt that it produced in Mexico for $10. And suppose for the sake of argument that 1 US dollar is equivalent to 1 Mexican peso. If this is the case, then Business A should gain $5 from the sale of every t-shirt they produce and distribute. Now, suppose that by the time the Mexican company finishes making all the t-shirts and ships them to Company A, the value of the Mexican peso has increased to the point where, say, 1 peso is now equal to 2 US dollars. As the price of production has increased to $20 per shirt, selling them for $15 each would result in a loss for Company A. Businesses often buy future contracts to lock in a certain price for a transaction to avoid this and other price changes. On the other hand, with any type of market, even Forex has its own downsides. On the stock market, you can research a company's merits before buying or selling, determine if it is undervalued or overvalued, and then act in a way that will yield positive results in the long run. Foreign exchange, or Forex, is not like other forms of trading. Market volatility is exacerbated by the myriad of factors, from tourism to geopolitical dangers, that can affect any given currency. Truth be told, the primary participants are the banks trading with one another in enormous numbers that might easily smash you, regardless of how much money you have. Hence, inexperienced traders frequently experience swift and dramatic losses. Sometimes they let their feelings get the best of them and make a poor decision. The foreign exchange market is even riskier in countries where it is not controlled at all. A sizable proportion of brokers are dishonest and may even wager against their clients. We already discussed the incredible leverage available in the FX market. Okay, so there's a catch. Poor leverage decisions led to the failure of many brokerage houses. If the value of your position drops below the required margin, Your broker will sell some of your holdings to keep your loss from exceeding your initial investment. Trading newcomers make this mistake frequently, leading to a rapid depletion of their funds. While not every Forex trader will incur a loss, doing so carries with it significant peril. Now, so far, what are your thoughts on Forex? Is it something you're interested in investing too? Or do you have another one in mind that is much more worth it compared to Forex? Let us know what you think in the comment section below. But besides that, thanks for watching. This is Data Dash. And if you enjoyed learning from this video, then go ahead and hit the like, subscribe, and bell button to see more of our crypto uploads for you. Thanks again for watching, and we'll see you soon.